Hi, Catalina here again on this amazing LoanSense YouTube channel. Today we're going to talk about errors borrowers commit when going back to grad school or even in first-time borrowing, right? I'm going to talk about these errors because I want to give it the perspective of, I want to provide those, even if you have an undergrad degree. Undergrad degrees are highly subsidized, not just from the perspective of the university giving more aid, but there's more Pell Grants, there's more assistance from the government as well as from schools to help people finance undergrad degrees. The same level of funding is not available for grad programs. The same level of funding is also not available for parents assisting their children with school. So today I want to talk about weighing how to finance your education. What are the possible options with a preview on some of the post-graduation consequences of not understanding your actions or what exactly you're getting yourself into when borrowing initially. And I think this is really, really good because even though I'm the founder of LoanSense, we are a digital advisory service to not just help consumers understand how to best manage their student loans. We also work with lenders to help them understand how addressing student loans can uplift their loan origination volume and help borrowers with student debt ultimately close on a home. Our goal is to help you or your clients move from debt to wealth quicker and to do it in a way that understands fully the benefits of these federal programs. I am not one to subscribe and say that all borrowing for education is bad or taking on debt period is bad. I'm one to say it's an investment, and understanding the level of investment as well as the potential return on that investment is really important in making these decisions. So let me go into point number one I want to make. The number one problem I say from an educational borrowing standpoint is there's so much overborrowing that occurs. That means people who get student loans wrapped in with other sources of aid and think and don't understand what is a grant versus what is a loan, okay? As a result of not understanding that, what ends up happening is people take out more loans than they understood they were taking out. So 2 semesters goes by and it's like, wait, I borrowed $45,000 in loans and I didn't even know. So being very clear in the financial aid process, what's a grant, what's a scholarship, what's a loan, and exactly how much you're borrowing every semester, and adding last semester to this semester, semester 3 to the first 2 semesters, and really understanding exactly what your borrowing obligation is currently as well as what it will be to get that degree. Both of those things are super important. So the first mistake people make is just overborrowing because they're not fully understanding their financial aid package, okay? Overborrowing, especially in grad school, is very easy because you get offered, you can potentially, I'm not saying all institutions, it's based on the institution and their rating, you're going to get offered unsubsidized and subsidized loans. The second issue beyond borrowing more than you understood you're borrowing is error number 2, which is not understanding and not exhausting all subsidized loans first. So for example, a subsidized loan is a loan in which the government will pay the interest while you're in school. Those are more advantageous because you're not paying interest every day while you're in school or while you're 6 months graduated, called the grace period. That means that interest, if you take subsidized loans, interest while you're not paying on your loan is not being added on to the balance. People will not understand if they're taking out a subsidized and unsubsidized loans and they're not exhausting all the subsidized loans they can get which is loans in which the government is paying the interest while you're in school and in grace period. So definitely exhaust subsidized loans before considering unsubsidized loans, okay? It doesn't matter the fancy name of the loan. More than it matters is it subsidized or unsubsidized, right? So understanding not just is it subsidized or unsubsidized, but also understanding the interest rate. So obviously the best deal is a subsidized loan with the lowest interest rate. Exhaust and take those out first. The same with payback, by the way. You want to pay back unsubsidized loans with the highest interest rate first. So it's the opposite of the payback strategy. You want to take out more debt with the most subsidization at the lowest interest, right? So not understanding the difference between the type of loans being offered and not exhausting the one that's most beneficial to you. That's error number 2. Okay? It's especially important for grad school because in grad school, they let you take out grad loans plus grad plus loans. And before you know it, you could be borrowing hundreds of thousands of dollars and not fully understanding exactly how much, the interest rate, and is it subsidized or unsubsidized. Okay, those are some of the errors. Additionally, the third thing I want to address here is if you're going to a program in which you're going to intern over a summer or 2, or fellowship or whatever, earn some money, understanding what the interest accumulation on your student loan daily is helpful. Let's say, for example, you are accumulating $9 of interest every day on your student loan. That means you wake up that morning, you go breathe in the air without even buying anything, you're spending $9, right? Knowing that number is so key because it helps you understand on a daily basis what little actions you can take financially to mitigate the accumulation of interest on your loans. And I say that, like, for example, if you're standing in a Starbucks line and about to buy $6 coffee, just think, do I want that $6 coffee or could I use this to pay the interest on my student loan, right? So I'm not trying to say don't live life. What I'm trying to say is understand the numbers and then make wise decisions, which is like, let's say you have a fellowship, an internship, a part-time job, using some of those funds to pay the accumulating interest on your unsubsidized loans, which, by the way, unsubsidized loans means they're accumulating interest while you're in school. You could be paying down that interest so that by the time your grace period ends, all that interest that accumulated from the time you were in school to the time you enter repayment, instead of having it capitalized, which means it's all added onto the principal, and now creates this payment for you that's a fully amortized 10-year payment plan, which is like you pay evenly over 10 years. If you pay the interest while you're in school, your payment will be lower by the time they calculate your monthly payment, okay? And so if only paying part of the interest is all you can do while you're in school, it's still gonna have a positive impact on your overall payment month over month for 10 years. That's how impactful it is to make little daily decisions by understanding what is the amount of accumulating interest on a daily basis, okay? You can calculate this very simply. You can go to any compound interest calculator online. It will tell you if you borrow $150,000 of student loans at 6%, compounded monthly, how much would your interest be? You could see principal versus interest divided over the number of days of repayment. You'll get, okay, I'm paying X amount every day in interest, right? Or $2,000 compounds over this month, for example, then what am I paying every day? 2,000 divided by 30. You know, that's excessive. It's probably not compounding at that rate, but it's probably closer to 100 or 200. That was a bad example, but 100 to 200 a month, then how much are you paying in interest every day, right? So those are really, really good numbers to know, really simple to calculate, and is empowering to own your journey, own your experience, and to avoid making really big mistakes. Another thing that I wanted to mention that's less of an error, but more of a benefit while you're in school to think about, or to think about while you're going back to school, is figure out how to lower cost and prevent overborrowing, right? So what I mean by that is there better, cheaper housing options that may require a 5-minute greater walking distance, but that could help lower the amount of loans you take while you're in school. Is there some type of on-campus job you could take that will offer ancillary benefits? For example, for me, when I was an undergrad, I was a residential assistant because it offered free housing, for example. That's a huge benefit because then I didn't have to think about how am I going to pay for housing, right? Or if you do some type of part-time job for a few hours every day and it comes with a meal pass, for example, and then you pay less to eat, right? So like there's all kinds of little things you can do to reduce your cost that you can be a part of. Like I did grad school at the University of Michigan. There were so many opportunities between being a grad school assistant that paid for tuition. So I only had to worry about room and board at that point, plus gave you a stipend, plus gave you health insurance. There are tutoring opportunities where you tutor students and it's right off the dining hall, and one of the perks is you get to eat in the dining hall. There's other, like you can join living and learning communities where they pay for housing and you do X amount of community service every month. There's co-op housing where you only pay like $500 a month to live in. You have to share space. So there's like sacrifices you have to be willing to make. But there's all kinds of like options to consider to reduce the cost to go to school, right? And how I like to think about reducing the cost is especially thinking about how to reduce the cost of ancillary things. Like you're not going to probably be able to go negotiate tuition, you know, like the tuition is set, right? You might be able to negotiate your financial aid package, which I highly recommend. But the things you can negotiate is how elevated will your lifestyle be? How much money are you spending on alcohol? You'd be surprised by how much student loan money is spent on alcohol and drinking and all these other ancillary things. There are choices you can make on a daily basis to reduce over borrowing and to reduce the expenses while going to school. And I know sometimes as a grad student, it's really hard because I worked professionally. I owned a home. Not where I went to school, but I lived an adult life before I had to go back and feel like, oh my God, I'm earning nothing. I got to live like a student again. But it was really good for me because I was able to use my internship money to pay down a good amount of my student debt. I was able to obviously grow my skill set and get a much higher paying job. So thinking again about the ROI. And I was able to not just gain all the benefits of having a degree, but grow my network and grow significantly my ability to do work I'm really passionate about post-graduation, get funding to do that. I ended up, hands down, getting more out of my degree, not just personally and professionally, but monetarily than I actually would consider myself to have paid in. So that is a good investment. That's a good return on my investment. Okay, so just analyzing and understanding all of these errors and what can be the most advantageous for you is really vital. And to take the time to think through and make a pros con list, to save before you go to grad school or undergrad for that matter, and to think about how you want to use your time as well. I mean, time is valuable too, so you don't want to be only working or only doing things that you're not going to get the most out of your degree. You want to be smart about your time, but you also want to be smart about your money, and you can weigh those things all together and kind of create a plan for yourself. I hope this video was helpful. These are topics and themes I'm so passionate about because not only does LoanSense, my company in which I founded, help borrowers manage their debt post-graduation so they can achieve their financial goals and dreams, but before this, I was a college counselor. I ran college access programming, so I'm very passionate about topics like how do you think about your financial aid package? How do you think about your college choices, right? And your college choices that you make before and while you're in school highly impact the outcomes and the lifestyle and the ability to actually invest and grow your net worth and and living your life to your fullest potential afterwards. So they're all intertied here, and that's what inspired me to make this video. If this content's at all helpful, please share, please like, please subscribe, send more people our way if we can help with any post-graduation student loan questions, if you want to buy a house, if you have other professional goals. We are the financial advisor to this generation. I say financial advisor loosely because we're not technically financial advisors, but we are a digital advisory that has that really focuses on the issues of our generation to help us move from debt to wealth. So if that's helpful to you, love to answer your questions. Have a great rest of the week.